Welcome to the first video ever posted on this channel. And we have a trade recap making $1,366.93 trading in the month of March, really with one trade. Let's get into it. So, being the first video on this channel, I really have no new plans to change anything that I was doing. So this is going to be the same exact thing, pretty much, that I've been doing in terms of these recaps. I'm just now going to post all of them on this channel because I think it cleans things up and it makes the most sense, like, logically. Obviously, there's not a lot to talk about, which we'll talk about the specific trade here, but there's not a lot to talk about because it really was one trade. There's not a lot of data to dive into. But this was a pivotal month, I think, in my trading journey. And I say that in the sense of things happened, thoughts, and I made some decisions. I had some back and forth. And now, in a crazy turn of events, I am still going to be using some prop firm accounts that I have had. I never lost them. I've had them, and apparently the firm I've been using has modified some rules or has given me the ability to use a different account that will allow me to trade the way that I've been trading. Keywords, been trading the past years, or I don't know, 10 months I've been using them. I don't know. And so I'm like, okay, well, if that's the case, then there is potentially value here as long as they stay afloat. And I will use them knowing pretty well, though, that the goal is to leave as soon as possible. And when I say that, I really would like to get a payout or two, utilize that payout or two to fund my own accounts, and then move on, you know? However, for those who have followed me to this channel who know, the situation that I've been in has been because I was in $250,000 or so of debt, student loans, credit cards at the time, briefly. I just didn't think that it made sense to fund my own accounts. So I pulled money out of my accounts, paid down the debt, some of which I'm still paying. Thank you, Penn State. And but it's all good though in the grand scheme. Got a pretty good plan to pay it off, or we're on pace to pay it off pretty soon. So I'm you know, it's just, you know, it's part of the path, the journey. But in doing so, right, it's like, well, then I'm taking away from what I could be funding an account with, which in the grand scheme, it's going to be a couple years. It's going to be a blip in the time horizon, right? So that was the situation why we decided to do this. Now I am being proactive in terms of starting to set aside some cash every month while also paying those things down, because I'm not just paying the minimum payments. Like I'm paying I'm paying 2, 3, 4, 5 times the minimum payments, which my minimum payments are large as it is, but I'm paying I'm just turboing it down. So I'm going to maybe take a piece, set some money aside little at a time, and then as that goes further and further down, I can be more comfortable setting aside more money. You know, you get the point. Just because I don't want to have to deal with any restrictions, anybody's rules. I want to be able to do whatever I want to fucking do at any fucking time, at any place, on my phone. Like, I don't want to have to trade on a computer, on my phone. Now, the prop firm that I'm using now, it allows me to do that, but still, I just want, literally, I just want to be in control of it, you know, fully. So, with that said, let us get into this recap right now. So, you go 1366. Now, there are some trades that I actually have open, which I will talk about once they're closed. I will recap those, but they're not closed right now, so there's no reason to put them in because they're open. But this is the month we had a trade on gold, and that was literally it. You have to go back to 313, okay? This is on 2 different accounts. At the time, it was on a $200,000 account and a $25,000 account. Okay, so this is the 20. We made $287 on the $25,000 account, and we made about $1,080 on the $200,000 account. However, my sizing is going to be even larger, like substantially larger than these sizings now, given the accounts that I currently have, because of the different drawdown and the risk rules associated with them. So with that said, the sizing is going to get even larger going forward. But if we go back in time, this trade I entered at approximately a day that I got in. I got in at 13:11, so just afternoon, I think, if that's time is correct. And then the next day I got out just before noon, I suspect. Well, yeah, no, I suspect. You can go and let's look at a 5-minute chart here on TradeZella, and you can kind of see, yeah. So I got in here, all these candles are 5 minutes. So yeah, it was about a day, a little bit under a day that I was holding this trade. So that was the trade. Nothing crazy, right, at the time. Now, if I go back to the chart, this is taken on the 4-hour time frame. So I got to go to a 4-hour time frame and pull it up. And that's the cool thing about this is it's going to give me the TradingView charts, which is sick. So what was I seeing? I'm blocking a lot of this stuff. No, I'm not now. I can adjust it. There you go. So I was seeing essentially that this level, if we toss in a horizontal ray, hey, right there. Oh, come on. Where is it? A horizontal ray. Okay. Right here. So you toss that in, and I go, okay, this is a level we've been having a tough time breaking on the 4-hour time frame in the grand scheme of a very, very strong uptrend. And then we had another consolidation right in here, literally right here. Once we broke that, I wanted to get in. So I ended up getting in, I think, shortly after that. And then was looking, well, my stop loss was at the time below this level right here, below the breaking candle low. So the entry was exactly at 29.3762. And my stop loss would have been under that candle low, which was around 29.13. Okay. So about, I don't know, what is that, like 20 something bucks on gold. And then my target ended up being about $40 higher. So roughly a 2-to-1 risk reward. Worked out perfectly, hit the target, and then actually kind of consolidated and went for more. Either way, I'm happy. It made money. That was a trade. Nothing crazy. Really just looking for the breakout. Now, as I dive into this really quick, which I have to adjust because this is now off, because I haven't done these videos in a while, to be honest, man. It's been, well, there haven't been many recaps to do because I haven't had too many trades. I'll talk about that in a second. But that trade was back on March 13th, right? So you go back in time, and that puts us in this ballpark right here. Like the breakout was over this level, and like this was the trade. Like the breakout move was this right here, okay? We have since on gold actually gone substantially higher. It's like gold's now well over 3,100, which at the time we're talking about, 29, range, just north of 29. So a couple $100 move on gold since then. So it's been a strong beast. Now you can say, well, why don't you hold longer? You're missing out on opportunities, right? You could be holding this trade longer. And, that is the thing I always talk about. And I talked about back on my other channel where I used to do the recaps. The reason why is because my strategy is my strategy, and I have all this data on my strategy. And so I haven't really had a ton of need or looking back at it at a lot of trades. It's in the back of my head, but as I go back on these trades, there's so many situations where it would have hit my target and then immediately fell back off. So I would have actually made less money on the trade had I looked at more of a scaling out approach. And there also are times where it does go. The ones that are in question are the ones that, oh my God, how did you not see that it went higher? It could have gone higher. You could have made so much more. But the thing is, no one likes to talk about the times when it didn't happen. So from what I have seen and what I have quantified, it ends up being pretty close to like no change in terms of my strategy. So I could have more of a scaling out approach. And obviously like something I'll be tracking over time. However, in doing so, I'll have some trades that will go longer and I'll make more money. I'll have some trades that I take off partial profits and then it comes right back down and I end up making less money in the trade. And so it ends up evening out to making it about the same that I would be making with my targets as it currently is, the way I'm doing things. And so it doesn't really matter. It doesn't I don't need to do anything. I don't have a need to change that. So so back to this. In terms of, there's not much data. I mean, we can look at the chart. Like we can look at the reports. Like there's no reports to be had here. It's like, yeah, the trade was 22 hours. It's like, okay, cool. This is all who cares? None of this stuff matters because we don't have like losses in there. We only had one trade. Like it's the same, whatever. 100% win rate. Check me out, dude. No lose strategy. It doesn't matter. But what's more important is on the year. I guess we can look at the year to date. This is a solid. This is the trade that turned me green on the year, technically speaking, with the increase in size. But also prior to that, my win rate was around 45%, or I guess just south of that. My average win-loss, 1.7. It's fine. It's pretty good. It was a little bit lower. This trade actually bumped that up substantially. So it was like 1.5, 1.4s, 1.5s. Nothing crazy, but I just didn't have that many trades. I only have 35 trades total on the year. Now we're in April. At the time, it was mid-March. I only have 35 trades on the year total. I have 2 more that I'm open right now, so we'll see what happens with those. But I've been trading a lot less. And this is kind of by design, because my view for this year is to take a lot less day trades, or to take like not even a lot less, like a substantial, like I had hundreds of day trades last year on the year, and I was about break even. So what's the point of taking these day trades if I'm going to be break even? Now this year, my plan is to take a lot less day trades this year and roll with mostly swings and see if my data is substantially better than last year. Super early, we're about a quarter in, so super early to say, who knows? All I know is that the sizing is going to be substantially larger. So can we look at these numbers? Let's say the next 2 trades I have are losers. We're going to be down a couple $1,000s, very likely, because I'm just trading with much larger size. So that's something to also consider. You're not going to get a good sense of this data until we get like 6 to 10 months into the year. Once we get to the back half of the year and I've taken, a couple more trades, great. The second piece is that with that said, like I've also taken on more responsibilities. I've taken on more things. And so in doing so, and I was also traveling for the beginning of the month of March, at the end of February and in early March. So there's just things going on that I don't feel the need to do. Like I don't have to trade. This is not like I don't rely upon this money to make this income to make me money, like, or to pay the bills. So I don't need to spend all this time mentally and drain myself. I'm only going to try to take trades when I'm like, oh, we have an edge. You know what I'm saying? So the times where I don't feel like we have an edge, I'm not going to trade. The other piece to this puzzle too is if you look at the S&P 500, over this past month, like, yes, we had a pretty substantial move to the downside end of last month into this month. Cool. I had some shorts for a period of time, whatever. But look at the size of these candles, relatively speaking, right? So the average, the moves we've been seeing are up, down, wicks, this, that. Like, this is not the type of situation that I want to trade in, really, to be honest. Especially when there was the chance and the risk of Trump's news, this, that. Like, people, whether you like him or not, it doesn't matter. Like, why would you put yourself in positions to trade, swing trade, when the risk of high impact tweets, literally, or whatever, posts or high impact news or press conferences or whatever, meetings, right, with other countries is so high right now? Eventually that's going to slow down, and eventually it won't matter as much. The market will kind of adjust to it, adapt, and it's fine. But like, there's just no point. So I'm like, yeah, we have this potential set up here, but I know that there's this meeting with him, her, this person, that person. Then you throw in Jerome Powell, the Fed, the CPI, and I'm like, I just don't. I don't need to trade. Like, there's no need to trade this stuff. Not to mention, I'm busy. I'm traveling, doing this. Like, I don't need to do this. You know what I'm saying? Like, I don't need to do this right now. So that's part of the game. Like, that's part of. I used to never have that approach, because I was always like, I need to do something. Money's got to get to work. We got to get something. Got to always be in a trade. There's always a long or a short to be had. Yeah, but that could also come back and bite you in the ass, as I have seen myself. So I'd rather just take more trades, or take less trades and take the trades when I have a higher conviction, or just when my edge is setting up, or my setup is setting up, and I know like there's less chance for these craziness, like things that I can't control. Like it's just, you can only control your strategy, your stop, your take profit. But when there's a lot of things that you're aware of that you can't control that will definitely impact this trade, like, it's like, well, we don't have to trade this, So that's kind of in a nutshell where we're at and why. I'm excited for this. To be honest, I'm excited for the rest of this year. I'm really excited for it. I think I've gotten to a point where my sizing is nice. It's nice. When I say nice, you'll see the next couple of trade recaps that come out. It's going to be substantially larger. So I'm like, the sizing is nice. I like it. It's like a spot that I feel like I've been working towards this sizing for so long. You know, we'll get there, and now here we are, and like, okay, I'm feeling pretty good about that. And like, so it actually moves the needle in terms of like what it will do for me, right? In terms of my own life, my expenses, and all the things I have to pay for. You know, the way that I was trading the past maybe 2 years or so was so small, and I was okay with that. Like, I was like, hey, it's okay. I'm gonna sit back. I'm gonna let this happen. It is what it is. I'm here. I'm sitting. I'm okay if the next couple of years I got to trade super small size. I don't make much money and I don't have much to show for it because I'm going to get the data. And now I have the data. I've learned, I've seen it, I've been it. I've gotten so much more mature in how I handle myself with this stuff. So now it's like, all right. And I've also become more, you could say, numb to the money. It's not even numb to the money, but I just know the realities of it. So it's like, yeah, if you go and you lose $4,000 in a trade, but then your winners are $5,000, $6,000, $7,000, $8,000, and you come out at around a 45-50% win rate, you're going to be good. Like, you're going to be fine. So yeah, you're going to have a couple losses in a row at times. Yeah, you're going to have a couple winners in a row. There's no reason to get too high up on the high horse when you're winning, and there's no reason to get too low when you're losing, because I've been through the same thing, just with smaller size, but I know it's the same exact thing, and the dollars are dollars, and it's just how the game goes. So yeah, well, you could be down a couple grand, you could be up a couple grand. That could be taken from you like this. That could be flipped in just like this. Two trades, boom, boom, boom. Whoa, completely different ball game. But it takes time to get to that point, get okay, get comfortable, and there will still be a adaptation phase, I would suspect, with the larger size. I'm going to be like, oh my God, it's kind of a lot. Like, because I haven't traded with a size that large. But when you have the data backing you up, you don't have to worry about it. That's just how I feel. That's the situation I'm at. I hope this is somewhat helpful from like, a mental perspective. Obviously, this month, yeah, I mean, we made $1,300, but it was really one trade. So we'll see what happens next month. And, we'll go from there. So, this is now, I'm highlighting this month, which is April, but that's not even the month. There's no trades in April. I got to go to last month. This is March. So thanks so much for watching. I will leave a link to TradeZella where I do all the tracking down below if you're interested. And I think code TC10 saves you 10%. So if you ever want to use them, save some money. And I'll see you guys in the next recap. Peace.